Welcome back to TV5 News at 9, everyone. Time now for Aging in Style with Vitale Wealth Management. And joining us as always, we have President-Owner Joe Vitale. Hey, Joe.
Good morning, Blake. How are you?
Good. How are you?
Doing good.
All right. So don't forget to get Joe's newsletter, Financial Vitals, for all the latest in market trends, financial news. You could just get easy access right now by scanning this QR code on your screen. Today's topic is changes in government and how it affects your retirement. So to start us off, Joe, what is the windfall elimination provision and the government pension offset?
Well, you know, that affected years ago a lot of some teachers, government officials, you know, workers, police officers. We don't see as many today. Maybe about 3 million Americans are still affected by it. Some are, you know, the spouses now are being affected by it, but that's what you're seeing is the Social Security amount they receive is so much lower because they really didn't pay into it because of the government pensions.
Gotcha.
So now, new act just passed and went into effect January 5th. So that's anybody who was affected by WEP or WPO, definitely get in there and get that application in right away. You know, they'll go back 1 year. They're not going to go back, oh, retro, they're not going to do that. But they'll go back at least 1 year, get in there with Social Security right away if you feel that you were affected by it. Don't call me because there's nothing I can do about it, but definitely get with the Social Security Administration and get that application in.
Yeah. Good. Just something good to know. Okay.
Absolutely. It's up to $1,000 or maybe even more per month. So it's a big payout for sure.
Very good. How would you say that lifting rollback affects government employees?
It's going to affect them moving forward. The new ones, not as much, but the ones that absolutely, if they didn't pay into it, you see a lot of them, And it's been over the years. That's why it affected a lot more, but it's only about 3 million now, which is still a good amount of people. You just never know.
Okay. So these new, the new ones, so how long will that take for those changes to go into effect?
Changes are in effect now. It's going to be probably, I was looking at something like 30, 60 days. Okay. But that's why I say get it in right away. And again, they will go back 1 year. So they are on top of it right now. The new Social Security Administration, the head of them put that into effect. So that was a good move.
Okay.
Yeah.
So retirees often on that fixed income. Yeah. So how will the implementation of like tariff rates affect their budget?
There's a lot of talk about that right now, right?
Yes.
Everybody's like, oh my gosh, tariffs. Well, if you look at it, here's what we can go off. We can go off a little bit of a past track record, right? Yeah. If you remember back in the first Trump administration, tariffs were a big deal in 2018. And everybody was complaining that, oh my gosh, everything's going to go through the roof. Well, 18, we did have the China trade war going on at that time too, and we did have a down year in the market. 10 to 15%, not the end of the world, right? But at 19, what happened? It skyrocketed, right? Because it was a little bit more fair trade at the point. Yeah. So we didn't see the price of goods and services go up dramatically either. COVID, yes, that was a different ballgame. But the tariff talk, no. So I'm a little optimistic about it. Yeah. And I think what you're seeing a lot of times now is the tariff. What they're talking about now is more of a fair trade tariff agreement where we're paying 20 to 30% in tariffs from other countries for goods brought into us. So the same thing holds true. If you want your goods brought in, you know, you're going to pay tariffs from them. So it's more of a fair trade as opposed to over and above. There is some other ones that they're talking about, Mexico and China and everything else. Right. So I don't think it's going to be a huge increase. I think initially you're going to see a little bit, but a lot of it's going to be absorbed in the other end too.
Very good. Some strategies that can help retirees' finances?
Strategies, I think the best thing to help retirees' finances is a lot of times we always talk about making sure you got the 3 to 6 months of cash on hand at all times. Always be cash strong, right? Because you definitely don't want to have to go in to pay something that you need to right away and then you're going to pay more than you have to. So have cash on hand at all times. What we're seeing too is we're seeing a lot of times that has nothing to do with tariffs at all, but with the inflation we're seeing gold's through the roof right now. Gold's at almost $3,000 an ounce, and so I don't know where I was going with that, but I was going somewhere with that and I totally forgot what it was now. That's all right. But the bottom line is making sure is having cash on hand, making sure that you diversify your portfolio. You know, have a good amount, because remember, we're higher for longer with our interest rates as high as they are right now. You can still get a good rate. So a great strategy for retirees right now, take advantage of the high rates we have right now. We can still get a 5.5% guaranteed rate on a 7-year. And it's guaranteed 7 years. You still have distribution, so it's not like a CD where you can't touch it. You can take out 10% a year. So it's a great way to get ahead of that.
Very good. Circling back to the tariff talk, market volatility, we talk about that quite a bit right here. Can you tell us if tariffs will play a big role there?
Absolutely.
Okay.
I think that's the one thing we talked about is I think we're going to have a good year this year. I'm optimistic because when you're seeing a lot of red tape cut, you see a lot of tax reductions, that's going to be a headwind for growth. Now, with the tariffs, that's going to be kind of put a little volatility mix in there. So I do believe we're going to have volatility because the market has to digest what's going to happen.
Right.
Once the tariffs go into effect, once we start playing back and forth, the market's going to get a little squirmish. They're going to go back and forth. It's going to be volatile, but I think we're going to end up positive.
Do tariffs mean inflation right away? What's the pressure on that like?
A lot of people are presuming it's going to be inflationary,
Yeah.
but there's talking heads on both sides of the aisle on that. So I think initially the big talk is it's going to be inflationary because they're raising prices, which means our prices have to go up.
Yeah.
But at the other side, the other talk is what if they absorb on their end some of those tariffs and don't pass it along? And could it become reducing ours because it's going to be more fair trade? It's not going to be as much. So I'm not going to, and with the interest rates, I think it's not going to be that inflationary. I could be dead wrong, but I really believe based on our past track record, it's not going to be inflationary.
Well, you did say you were an optimist.
I am an optimist,
So
yes.
that's good,
yes.
good stuff.
And plus, I'm not the smartest guy in the world, but I do go off of past track records. And if you go off the past track record, it's pretty optimistic.
Yeah.
So yeah, I'm going on that.
Good stuff, Joe.
Yeah.
So we covered a lot. The biggest takeaways that you want people to be aware of with some of these changes going on?
Stay the course. Don't get all, I was going to say something that I probably shouldn't. Don't get all nervous about everything.
Okay.
If you stay the course and you're properly diversified, right? You've got money in growth. You've got money in safety. You got money in the bank. You don't have to worry about this. But people are always like trying to market time. You can't market time.
Yeah.
I mean, those who market time, they're the exception. Majority of people, if you have money properly invested, I still like domestic. You know, everybody's like, oh, look at all these emerging markets. Let's go international.
Yeah.
If you look at the past few years, there's so much more benefits of staying domestically invested.
Okay.
For the risk. So keep money in growth. You know, that's one say we've seen a lot of people in our value portfolios have not been doing as well as the Magnificent Seven, right? But that's high tech, and that high tech is still going to do really good. But don't forget about the value portfolios. Those have been steady Eddie, you know, 11, 12% rate of return over the last 16 years. That's very solid. So make sure that you have a good amount of money in different positions where we can have reoccurring income without having to worry about volatility. If you're properly invested, you don't have to worry about volatility. That's the biggest takeaway.
Great. Anything else, Joe, that you want to add?
Call us. Stay the course. Call us. We'll help you be properly diversified and make sure you're in good shape.
Perfect. Thanks for coming in, Joe.
My pleasure. Good to see you, Blake.
Good to see you. And don't forget to get those market updates and more with Joe's newsletter, Financial Vitals. And if you want more information on this topic today, make sure you go to the Aging in Style page on WNEM.com.